Welcome to TheoTRADE. This is Don Kaufman. It's August 25th, 2023. Just about 12 minutes left inside of the trading week here on this Friday afternoon. Volatility has just cracked this marketplace wide open. I'm actually going to explain in depth in this weekend update why this two-sided and rather wild trade, it's here to stay. First and foremost, let's start to break down some of the sectors, a couple of individual stocks we'll talk about, and then jump into, again, why this two-sided trade, it's just going to continue to kind of resonate in this marketplace. And if you're thinking that volatility hasn't been cracked wide open, yeah, I think I'm going to change your mind. Again, that's not meant to be a directionally biased comment. We're going to see a lot of two-sided trade, but yeah, it's on right now, and I'm going to show you again exactly why. So let's start with a little bit of the obvious, okay? When I say that, volatility's cracked wide open, look, you're not going to have to look very far into the, I'll start in the S&Ps. I mean, even today's trading session, just wild. So Jerome Powell speaks, right? From Jackson Hole, market rallies. We almost hit 44.30. Oh, minutes later, we're down at 43.65, only to reverse back to almost 44.30. You got 10 minutes left, and they better close this marketplace because it could turn around and sell back off substantially. It is, okay, it's wild out there on an intraday basis, and I got to tell you, I like it. However, when looking at the S&P futures, like volume-wise, I would have expected more. And I really mean that. Like, I would have expected more. And I was looking at option volumes yesterday. For those of you that speak a little bit of geek, all right, so looking at option volumes yesterday, and the option volumes were actually below norm. Norm is like 44.5 million contracts a day, and we were below that. We were just shy of about 42. I think it was about 42 million contracts traded yesterday, which effectively tells me, first of all, there's been an incredible concentration of liquidity. That basically means no one's trading anything but everything that's in play. Right? So it's the tech stocks, but you go off the beaten path, you start to look at something like, Costco, like everybody knows Costco. And a lot of us have actually traded this. You start opening up like the option chain, like there's just nothing going on. There's just nothing going on. The concentration of firepower has been incredible into a handful of products. But again, the volume, it definitely leaves something to be desired. By the way, I wasn't joking about the market and the possibility of selling back off over here. This marketplace, again, it's just, as I said, cracked wide open. Mr. Toad's wild ride. So to look at volatility, the first thing, you look at price action, look at the 30-day 1 hour. Obviously, we've sold off to some degree, but this week, it's not about a sell-off. What really transpired in the week? Okay, and as I said, it's not meant to be like a directionally biased comment when I say volatility is cracked wide open. Okay, I'll tell you exactly what's actually happened in the week. Ironically, this week we're actually going to end the week higher. Not dramatically higher, but higher. If you take a look at the QQQ, we're going to go to the Qs. It's the Nasdaq 100. You know it, you love it. Okay, applying expected moves. Did you realize the Nasdaq, okay, was towards the upper edge of its expected move? Okay, go figure. And yet I'm talking about volatility cracking wide open. Oh yeah, huge. Okay, huge reversal. A lot to do with AI, which we'll talk about again momentarily. But before I get even into, AI, before we talk about, okay, NVIDIA. Oh, he said NVIDIA. Okay, let's look at the financials. The financials massively unchanged on the week. Okay, energy sector. These are critical sectors. Where is the energy sector? Okay, down quite substantially on the week, just off the lower edge of its expected move. So where does that leave us? Okay, where does that leave us? Obviously, with a mixed bag of goods to some degree in this marketplace. Like it kind of leaves me wanting more, but there's a few factors in here that are going to have to be watched very, very carefully into next week. Now, one of the ones that could literally unhinge this entire marketplace. All right, we'll bring it up. Okay, as I said, you know it, you love it. It's NVIDIA. NVIDIA, okay? The big question mark. And it's a question mark at this point. I am not going to make the statement that that's it for AI. I'm not going to make that statement. Buy the rumor, sell the news, whatever. I don't care. Big question mark is, was that the kind of key reversal? I know some people are going to try to call that, but if it was, okay, if it was the key reversal and we're going to see sell side, and this is going to become the great artificial intelligence unwind, if that's the case, it's over for the S&Ps. Stick a fork in them, they're done. There's just no way. I don't care what you might think about financials. I don't care what you think about the energy sector. Nothing can hold this marketplace together. If NVIDIA unwinds, okay, Meta is likely going with it. Why? AI. What else is going with it? Microsoft, okay? Microsoft, speaking of Microsoft, holding on to the 320 level like it was grim death, okay? I mean, there's no way that we see NVIDIA going down on a big reversal without pulling other major tech stocks. And at that point, the reason I say it's over for the Nasdaq and over for the S&Ps, if NVIDIA has this unwind, and that's a big if. I'm not ready to, look, I've got short positions in NVIDIA. I'm not ready to call it though. A key reversal, which by the way, led to yesterday, NVIDIA was massively unchanged. But if you look at this from an auto expected move point of view, we're just at the upper edge of the expected move. Okay. Effectively, the stock is still, well, considerably higher on the week, right? How ironic. It's literally on the upper edge of the expected move. That's why I said it's too early to call it. But you got to kind of put on your game face coming into next week, because if there's sell side in there, it's going to pull the whole marketplace apart. That is not why I say that volatility has cracked this market though wide open, right? That's okay. Again, I think it's on everybody's mind and everybody's talking about it, but that's not the driving, force in here. The driving force, and again, so we're going to watch NVIDIA early into next week. If it continues to come off, it's going to be a little bit of a bloodbath inside of technology. Obviously, okay, I do believe that everybody saw the reversal inside of the Nasdaq yesterday. I think it only does it justice when you put it on a 30-day 1 hour inside of the NQ. Take a look at that. All of a sudden, we're trading 15,400. Okay, and then a day later, where you're trading 14,700. That is a big boy move. When you're seeing 500-600 point moves, okay, in the Nasdaq, obviously volatility is there, and we got a bid back under us though today, but that bid is meager. It's about a 1% increase. All right, for a second, okay, push it aside, and I'm going to tell you why you should push this aside. The AI unwind, okay, has it begun? You got to push it aside right now because you simply don't know. I don't care what technicals you have. It's look, that's just not going to do it justice. Sell side comes in there, it's going to come in there. Order flow is not dictating anything in there. I've been looking throughout the course of today's trading session, specifically at NVIDIA. And I was looking at it this morning. I was looking at it throughout the course of the day. When I say order flow is not dictating anything, look, traded at the ask or above, traded at the bid or below. It's pretty equivalent, which implies that, yeah, everybody's trading the short duration options in here. Okay, by the way, you got to look at this volume and open interest. I was looking at this just a few minutes ago. Yeah, look at that, 107,000 contracts, 130,000 contracts. It's a stock, people. As I said, all the firepower is being aimed, at a handful of products. Speaking of which, I wanted to reiterate that point where NVIDIA is doing 2.7 million option contracts today. That is disgusting, because there's your Nasdaq. If you take a look at SPX, obviously SPX is like a $4,000 product. It's doing about 3 million. You're gonna love this. And the spiders, okay, what are the spiders doing today? They're good for 9 million. So you start to add up just NVIDIA, spiders, SPX, okay? It's that right there unto itself is like a third of all the volume in the entire options market today. It's crazy, right? Okay, I didn't even get into stuff like Meta. I need not get into stuff like Meta, which is good for another 500,000. It's a handful of stocks, okay? Handful of stocks and indices that are doing all the volume in this marketplace, like all of it. So again, we push aside AI for a moment. Why? because it's completely up in the air. I'll remind you that NVIDIA still finished the week considerably higher. The issue, okay, for volatility, to me, it comes by way of bonds, okay? There's no good move at this point for the bond market. What's the good move at the bonds? Well, if the bonds continue to sell off, interest rates are going to continue higher. Have you not looked again at the TNX? The TNX is actually related, of course, to the 10-year. Okay, we're not quite at highs of that, 4.3, but we ain't far off of it. All right, we're a hop, skip, and a jump, a little pullback, and then we head higher. That right there will snap the back of this marketplace. So I want to reiterate the bond market. Okay, in my opinion, there's no great move for the bond market. If the bonds sell off from here, it'll snap the back. I mean, nobody's going to be able to handle like it's higher rates. Okay. Meanwhile, if the bonds start rebounding, okay, it could be simply because money's coming out of S&Ps. The only way, all right, that markets can kind of die back down a little bit is if the bonds literally go completely flat, which I just don't think is going to be in the cards. And I don't think it's going to be in the cards because if you look at the calendar for next week, go take a look at the calendar next week. You've got all kinds of economic news coming out, and then we're going to cap the week with a little employment situation. It's a party, people. Okay. I mean, they're even going to be looking at JOLTS. Okay. Again, it's going to be a crazy couple of weeks. And by the way, we're also historically speaking entering into the most volatile month of the year, which is September. Everybody always thinks it's October. It's not October, it's September. Just keep that in mind. Bonds, okay? It's a critical destabilizing factor. Now, I'm going to be very frank in saying I've been selling puts inside of the bond market, okay? However, here's the closing bell. I've been selling puts inside of the bond market. However, I don't have a great feel, okay? And I'm more than comfortable in actually saying just that, okay? I'm inclined to believe, though, that we could see a huge rally inside of the bonds. And I'm inclined to believe that because the S&Ps, okay, if they continue any sell side activity, there's just not a lot of asset classes to rotate into. If you think of like classical, representation, S&Ps go down, the bonds go up. I think we're actually well situated for that, all right? Because institutions, they can't just go to cash. And a lot of people are not familiar with that, but institutions, they don't go to cash, right? They're going to go into like bills, bonds, notes, anything. Okay, anything the U.S. Treasury sells, they're a buyer. All right, moving on. Okay, one of the other major destabilizing factors in this marketplace, the advanced decline line. The advanced decline line inside of the S&P 100 has hit extraordinarily high degrees of correlation throughout the course of this week. Okay, you can see it's not too far off right now. I talk about this constantly because when you start getting like 90 products, at one point today, we had like 92 products trading to the upside. Okay, when you get like 90, 92 products, the market starts to trade, okay, much more cohesively. Okay, and that actually can really, expand, if you will, some of the moves, but it also leads to a lot of two-sided trade. That is big reversals throughout the course of trading sessions, and that is exactly what we have seen. I mean, when I talk about reversals, nothing screams reversal more than obviously trade on Thursday. So out of the gate, NVIDIA, has got the marketplace higher, fell flat on our face. NVIDIA actually ending up massively unchanged, but other tech stocks in the Nasdaq got absolutely demolished. Nevertheless, okay, high correlation inside of the S&P 100 is prevalent. That is indicative of us making more substantiating moves. As I was saying, two-sided trade is obviously going to remain at this point. So there's one other aspect that plays into two-sided trade. And of course, everybody's going to think about the volatility index. The volatility index got crushed back down today. So things maybe subsided a little bit. That's to be expected. All right. What'd you have on the menu this week? A little Jerome Powell. So Jerome Powell got served up. And I have to tell you, from my perspective, he was very hawkish. Okay. Nevertheless, volatility gets crushed back down. Volatility getting crushed lately, okay, doesn't mean a whole lot. Like I am not a big advocate per se of VIX. If you look, okay, at aspects of like, average true range, okay, it's exploding. Okay, I mean, you need only look at like, Nasdaq in here. The average true range is absolutely starting to explode. Possibly the biggest though would be something like along the lines of like Nvidia. Even for earnings, the moves that you're seeing in some of these tech stocks, okay, are way outside the norm. And it's one of the reasons I keep saying, like, I don't know, volatility's cracked wide open and it's here to stay. So this two-sided trade is going to remain. There's one other aspect that really kind of resonates with me. This is not so much in the here and now, but something that we need to keep our eye on. Okay. The dollar has been incredibly, incredibly strong. Okay. Ripping basically just below the 100 level. And this is $DXY, ripping below the 100 level and exploding back off of it. And the reason I actually caution on the dollar is simply, and again, to show you the bigger picture over here, when inflation was totally out of control, obviously the dollar was considerably higher. Inflation comes down with the dollar down, but this bid, if we continue to the upward bias of the dollar, and as I said, this is a little bit of a longer term take, we have that upward bias to the dollar. I think you really have to anticipate that it's going to reignite inflation because a stronger dollar, okay, exports inflation, making, I mean, it's goods and services throughout the entire world can actually go up. So keep this one in mind because you might start to hear that that drumbeat very, very soon that inflation is all of a sudden it's making a comeback. That was actually one of the aspects that Jerome Powell was even discussing today, not so much in light of the strong dollar, but keeping an eye on the fact that there's only been a couple of months, obviously, of a little disinflation. So not ready to go out there and start clapping just yet. All right, last thing we always look at here, okay, SPX. All right, SPX and the expected move. The one thing that I just really want to resonate with you, okay, into next week, yeah, you're gonna have a lot of two-sided trade. Again, I don't care what the VIX is. So it's back down to 15. Exciting. That's lovely. The bond market is a few ticks away though from cracking the entire back of the S&Ps, and it's just, again, we are in a stuck between a rock and a hard place here. This past week of trade, which you're looking at right now, and I'm just going to zoom in on it. Everybody gets a look. That, okay, right there is roughly speaking plus or minus $79. You had $79 of expected move. Okay, did we hit it? Of course we did. We actually hit it. I mean, we were on the expected move. I talked about this expressly on the Wednesday night video, how we're very likely to reverse off of it. That's the highest probability to reverse off of it. We reversed right back to unchanged in the week. A little bit of a bid back over here, but look, okay, today's trade felt more like noise than trade. I mean, it was just a little bit of noise, just waiting for the next catalyst. And every piece of economic news that's coming out, okay, is nothing more than just lighting a fuse in a marketplace that's literally a powder keg. So you had the $79 expected move. We had a lot going on this week. The Nvidia earnings were big. The Jerome Powell was big. The durable goods. Okay, news kept breaking. What are we looking like for next week? Now, the expected move for next week is not completely set. The expected move gets set 15 minutes after the cash close. However, we're keying into about a $67 move, okay, which is still decent. So why is the expected move, $10, $12 less, okay? I don't know, because you don't have Jerome Powell doing a little bit of a dance in here, okay? We should see and did see volatility crush down a little bit, and that's exactly where we're at right now. But a $67 expected move is still rather big league. I mean, again, I just, I look at the $67 and I cannot help but think it just seems ridiculously low. Yeah, that's an opinion, but that expected move, like people that sell short duration options right now, okay? I mean, out of your mind. You just got out of your mind. That volatility, 67, you think that I'm going to go out, and I just want to show you the $67, right? If you went out right now and we're trading what? 44.05. If I sold, okay, a 44.05, okay, 44.05 straddle, it's trading for basically $62.80. Out of your mind. There's no way I would sell that. Why? Okay. What was the range just yesterday? Forget about, the range. We're trading, we almost cracked into what? 44.60, just shy of 44.60, all the way back to what? 43.75. Yeah, I got your range right here. There's multiple days. Multiple days. Last week, the week that we just passed through, multiple days where we did more than was expected for all of next week. I don't like it. I don't have to like it. I don't even want to like it. The marketplace, that's why, again, that short-term volatility and VIX looks incredibly and inherently low versus some of the risk that we're seeing in the marketplace. It's one of the reasons I'm not mentioning, much of the VIX, because the VIX, I'm telling you be careful right now. This VIX can go parabolic straight up, right? Because it feels like every time a little bit of volatility hits the marketplace, all the volatility starved animals, come out of the cave and I need my volatility, and they start selling some premium in there. That could be the cause for a devastatingly large move to this marketplace. Again, I reiterate, volatility has just cracked this marketplace wide open. Thanks everybody for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.